Today's the 26th of March, and we're going to go over the upcoming week's technicals analysis. Alright, to start off with now, we have the Euro US dollar daily chart, and we are currently entered short in this currency pair. As you can see, it's just dropped off a fairly strong resistance. It's been tested 4 times, and we entered at the start of the week, so it was around, I think, about this candlestick here, and it now is approaching the 200 moving average. We've set the take profit initially here at the 1.09 mark. However, once it does break the 200 EMA, if it breaks the 200 EMA, then we will have to evaluate it to see if it does have enough momentum to possibly reach this mark at the 1.07. But for now, it is looking very bearish, and we are fairly confident of this. As you can see, the RSI is set up quite nicely for some downwards movement, and with the US dollar strengthening over the last week, we hope it will continue. Right, if we move on to the Great British Pound, now this has dropped a fair amount this week. Yeah, the bears are currently in play. As you can see, it has dropped off this resistance here, this declining resistance. It's fairly strong. It's fairly close to these swing lows here, so reinforces it a bit more. This strong drop off this week does reinforce a possible bearish continuation. However, this RSI did drop fairly quickly, as you can see on the 4-hour chart. Yeah, it dropped down to oversold. Currently, we're probably going to wait for the price to go back up to the 200 EMA and for the RSI to get above the 50 mark. And once it shows some bearish drop, then we will enter short, and we will look to target that previous low at the 138 mark. Okay, moving on to the New Zealand dollar. Now this one has been very flat over the past few months. There's no clear direction to this, because you can see it's slightly going upwards, and it's been trading within this channel since September 2015. So yeah, it's been very flat, and it's been range trading between here. As you can see here, it's just there's no structure to it at all over the last since the start of the year actually. So what we'll have to do is we'll have to look on a shorter time frame. As you can see, the 4-hour chart, it does seem to use this support line, and it does use the 200 EMA actually as a support, because 1, 2, 3, and it's currently there now, so maybe 4 times it could use it as a support. And at the moment it is hanging around the 200 EMA, and the RSI is close, fairly oversold, so it was about 37. So we will expect this to rise, and it probably will go back to this swing high at the lowest, so that's this 0.6857. But to be fair, we are steering clear of this currency pair. We'll trade it if it's like this setup. If this does show a bullish continuation, then we will probably enter into a short long position. But for the long term, we are steering clear of that. Okay, the US dollar Japanese yen. Well, it dropped down to the 1.111 mark here back in February, and since it's been trading within the 0 and the 23.6% retracement. Currently, it did drop down. I think it was last week actually. It's dropped down to the 0 mark again. However, so look at the 4-hour. It did fairly strongly retrace back upwards. However, as you can see on the 4-hour, the price is now approaching the 200 EMA, which is a very strong resistance line. You can see it's nearly used it there a few times, and the RSI is close to the overbought position. So we are expecting this to drop back down to the 0% mark So we'll wait for some bearish confirmation, maybe a strong bear candlestick, and then we will consider entering short to the 111 mark. Okay, we've got the Aussie dollar now. The Aussie dollar has been quite good over the last few months. Since the start of the year, it has been increasing. It actually broke the daily 200 EMA and fairly strongly, but now it's started to show signs of dropping off. Maybe we don't expect it to be a full drop. We are actually expecting it to come down to maybe the 200 EMA mark, because as you can see, it's a very strong zone with the 200 EMA and the two supports there. Well, we have the lower support, which is this inclining support, which has been tested 4 times already, and then twice as a resistance. And this one, the upper one, was just used twice as a resistance. So it's not too strong, that one, but this is the one to watch because it is right on the 200 EMA. So we are expecting it to retrace back down to this zone here. And then once it shows some bullish signs, we will consider entering long to hit this declining resistance, which is a very long-term one. It was set back in around about June 2013. It's been tested once, twice, 3, 4 times already. So again, very strong. So this zone here is what we're looking for. We're looking for it to retrace back down to here, show some bullish signs, and then shoot back up to this roughly around the 0.7836 mark. But the US dollar CAD this week actually has been a very bullish week for the US CAD, and it's probably due down to the rise in oil prices, which will of course make the Canadian dollar drop because it's very commodity reliant. We still don't think there's enough movement there to justify entering long. Of course, it's still under the 200 EMA, and as you can see, the RSI is showing a divergence because at the moment it's at the 47 mark, whereas back here it was at the around the 40 mark, and on the actual price action it was higher. So we will be wary of that. We're not entering long anytime soon, I don't think. We will wait for the 200 EMA to get broken before even considering entering long. But for now, this is a very bearish movement. If you look on the 4-hour chart, you can see it has been trading within this declining channel. It's a fairly narrow channel actually. It was set back in 26th of January, so yeah. And this upper channel is right in line with the 200 EMA, so it is a very strong level. So we are not expecting it to be broken anytime soon. Like I said, we are just looking for short positions at the moment to take small short profits. So at the moment, as you can see, the RSI is very, very close to the oversold mark, and again we have a divergence here actually. Let's just draw it. As you can see, from there to there, there's a slight increase, whereas from there to there, a decrease. Therefore, that does imply that maybe a move lower would be on the cards. So we will wait for some strong bearish signal, and then we will enter short with the scope of hitting this declining support. Possibly we'll set at the previous low first of all, and then reevaluate it once it does start to approach it, and see if it does have enough momentum to possibly continue downwards. But of course, it's always reliant on the oil as well, so we have to watch that carefully. Yeah, that's it for the week. Thank you for watching, and stay tuned because we will keep posting the signals, and once we get confirmation on each of the currency pairs, we will post that on our Twitter and on the daily analysis articles. Thanks for watching.